finance, a la shmup. What is a holding period, or a 144A filing? Which sounds way less sexy. Well, after you make love, there should be a holding period, right? So we're talking about investing here, so it's all different. All right, here's the gist. Back in the day, the dark days, before there was honest regulation of the securities industry, a whole lot of cheating was going on. Fake schemes would offer shares to an uneducated, unsophisticated public, with the sellers hoping to get rich quick, and the public would buy shares of a supposedly hot IPO, only to have the founders and funders of that fake or just crappy company dump their shares 5 minutes after the company was public, leaving the outside investors, holding the bag in the form of IPO shares that they paid $18 each for, which were now trading under $1. So today, insiders like founders and the early investors are presumed to have a lot more knowledge of the company's operations, projections, performance, and prospects than the general public. So the SEC instituted what is called the 144A rule, which sets out guidelines under which insiders can sell their shares, meaning they can't just dump all of them on the same day, 5 minutes after the IPO. Very roughly, insiders must hold their shares at least 6 months and change after the first day of official trading during an IPO, and they must limit the volume that, they're dumping. That is, if insiders own, say, 70% of the shares of a newly publicly traded company, they can't just dump 80% of that 70%, that first week after the 6 months is over. Got it? Well, in most cases, insiders seeking to get liquid, i.e. turn their shares into cash so they can buy that home they've been longing for, they hire an investment bank to gather together all the insider selling group of shares. The bank then quietly markets them to investors who had shown interest during the company roadshow, during the IPO. And then in an orderly fashion, the bank sells those shares to, interested parties. The goal here is to not crash the stock price in the process. You can imagine what would happen if a stock averaging 300,000 shares a day of trading suddenly had a supply of 50 million shares come for sale. Yeah, way more supply, modest demand, not a good situation. But, holding periods. Got to hold them 6 months. And fortunately, there's always cuddling. We like the cuddling.